get funded and how debt is managed and how the structure supports that. And there's one particular thing I want to share finally before we sort of move on to Q&A is Deity has got a structure in place. What they've done is I think they've gone through a fund of funds. So they got CanBank Venture Fund. CanBank has set up I think 2,000 crores of fund of funds capital. They're identifying daughter funds. So let's say each daughter fund gets 200 crores. The daughter fund in turn has to go raise another 3x of the 200 crores. So the 200 crores of equity now becomes, let's say, 800 crores. On the back of that, you can potentially raise some debt. So creating a multiplier effect. I think capital needs to multiply very consciously. And again, the government can take the view that this is risk capital that's being allocated. We need returns, and we're going to ensure the right governance that comes into play as well. So, with that, I'm kind of done with my piece for now.
Just a little bit. Where can we go? What are the avenues X, Y, Z? And then we can take it forward.
Can you hear this? Yeah. So I think, if you look at technology startups, right, I think we are still looking at basically venture capital, private equity. But within that, if you look at biotech and pharma, as you mentioned, biotech is the riskiest business to be in. And typically your venture capitalists and private equity players who are very gung-ho about it are now shying away from it. So in India at least, there are some more difficult routes to follow and smaller amounts of money, but you have your DST funding and you have your SBI RIS schemes and things like that. But by and large, I would say technology is either venture capital or private equity funding.
So the last 3 years, we've seen a bit of a fairly radical change in terms of some of the very early stages of funding. Venture capital is where you need to go. What has happened is that the whole cycle of capital has shifted upward in the sense that what venture capital would do in terms of $1 or $2 million ticket sizes for a Series A has now gone to $5 million for a Series A. What the seed funds would do in terms of $100,000, $200,000 have now gone to $500,000. What angels would do in terms of 10 to 20 lakhs has now become a crore. So there's been a steady sort of shift to the right, if I may call it that. So now a typical entrepreneur can start off with an angel or two through his network, his or her network, family and friends. Once the proof of concept is defined, can go down to an angel network. Angel network, you can actually raise up to 2 crores now. It's really increased and continues to do so. Once you get an angel network, then you can get follow-on angel investing because people now have got more comfort that an angel network has given you a check. Follow-on checks come in, and then after that you get ready to go to Series A. So there are seed funds and there are angels, there is FNF, and then there is the VC, the more traditional Series A route.
Yeah, sure. Yeah. In the Indian capital markets, if you see, there have been periods like in the 80s and 90s when, in fact, the individual retail investors were themselves like angel investors. Because if a promoter can create an idea and he would float an idea just like that, and then he will go to a capital market or a capital regulator and get approval. And a lot of retail investors have invested money in companies which were non-existent. They were just a pie in the sky. And then later on, SEBI brought in a lot of controls, and today what has happened is that the IPO as an option for raising money for startups is just not there, right? You have to have a long track record in order to do that. Then in the interim, we had a situation where we had created an exchange called Over-the-Counter Exchange of India, which was meant for small and medium enterprises. But why do you think in India, small and medium enterprises, for them to raise equity today still is very, very difficult?
There's one point I wanted to mention, which is very crucial, is exits. Capital flows when there's an exit. Everybody who puts in $1, a rupee needs an exit. Even the government has to think about an exit, which is why the whole virtuous cycle of having a liquid capital markets where IPOs happen is going to be highly beneficial downstream. See, we only look at the startup ecosystem and we look at the capital here, but we forget that what affects this flow of risk capital here is the downstream 4 year later exit scenario of IPOs or strategic buyouts or corporates buying you out or whatever. There are different kinds of exits that are possible. So the exits are going to be very, very crucial when this happens. So I think SEBI is not toying with another over-the-counter kind of thing. And in the late 90s, what fueled the boom as well as the bubble is NASDAQ, which offered, listings that
It was supposed to be the alternate to NASDAQ, but in India it never took off.
There are government supports are already discussed. I think DST is having a lot of financial schemes, not to the industries particularly. And Technology Development Board also supports industries for scaling off their technological innovations. Now, our program supports up to 80% of the project cost. Minimum 20% has to be brought in by the promoters. So this is one scheme where not 50-50, it is 80-20. And it also covers the capital investment into the project and also covers some kind of 6 months working capital limits.
We have a banking system which is reeling under a huge NPA pressure. Almost 3.5 lakh crores is what I read, and but they have been as Mr. Sampath has said, that they have been so averse to lending to startups, and they always want a collateral, they want assets. So, if anyway the asset-based lending is so risky, and they have been, having so much NPAs, they could as well, make it that knowingly they know that out of 3.5 lakh crores, okay, a lakh of crores is meant for risk capital. Do you think that kind of thing will work?
So this is what I alluded to in terms of leakage. Massive leakage has happened, and it's not been based on, obviously, a clear evaluation of risk returns. I mean, we know there's been a lot of other aspects and other political compulsions because of which banks have lent. There's a massive debt overhang as a consequence. It will take time for it to get squeezed out. And, if you look at the amount of money we're talking about in terms of debt to match the equity in terms of our startup objectives, it is peanuts. Ultimately, it's not very, very significant. The important thing is, see, banks won't do anything unless RBI provides the correct regulation and the right structure is brought into place. So you need a top-down approach that says innovation in India now needs debt support of 5,000 crores across these sectors or whatever. I mean, the details have to be worked out. And then banks, all banks don't have to provide it. It could be 10 designated banks that provide that kind of debt match. They could have clear criteria to be able to do that. And get over this collateral business is not going to happen. Right? So that's how they are able to provide it. Now, from the government's point of view, the fact that they put in some risk capital in terms of equity is they're seeing further exposure in terms of debt. Right? But then remember, there are other investors who put in 3x of that equity. So everyone's interests are aligned. As how Aditya talked about earlier, the alignment of interests across all stakeholders is very important, and I think we can get there with this kind of approach.
Some of the small companies today go to markets like London and all that through AIM and all. They raise some money. How easy it is for startups to go in and raise money in other markets other than India? Is it easy or very difficult, or it's very?
I don't think that is a statistically significant route, by the way. I don't think any entrepreneur's first thought, and especially when we are also talking about first-time entrepreneurs, is to say, you know what, let's go to the AIM. The AIM...
I'm saying outside of India.
Yeah, but outside of India in stock exchange.
No, anytime.
No, outside of India, a lot of companies go now. In fact, some companies even say, at least it was true 5 or 6 years ago, where if you had a hardware play, You could have a front end in the US and a back end in China. If you had a software play, you had a front end in the US and a back end in India. So how you structure that deal, the people could actually be from India and do the thing. So that I don't think from a equity standpoint it's not a problem, but from private equity standpoint. But AIM, in fact, when I was working in venture capital, if somebody came up with a strategy where the exit involved AIM, I would think there's something wrong because it's just such a hard way to do it. And also remember, it's not about listing. That's not where the game ends. The game ends with volumes. How much trading is actually going to happen with that stock? You can list it, but how many people will actually buy the stock and what volumes will they buy it? That is what defines the price. Now the OTC thing that you were talking about, one of the fears that, because I went to one of the early OTC meetings where they were when it was still part of a think tank, where one of the fears was that in India small shares are very open to gaming. Right? Everybody, one phone call from a certain state and the whole thing will go haywire. Right? So how do you prevent something like that from OTC? And at least at that point, the checks and balances were not clear. It wasn't clear how you do that. So that's another problem with smaller stock exchange and smaller listings. They are very open, very exposed to, manipulation. Liquidity is an issue. Yeah.
There's one more specific idea I want to contribute, which struck me, is that the risk capital structure should be a domestic structure with the same tax-free status as Mauritius. One of the big problems we have here is that, let us say that this particular fund, tax-free status. Now that is using your tax-free status truly effectively, because anyway they were getting it, but they had to do 15 things to get it. Now you're giving it to them, but making it easy. And you're signaling that you're serious about doing business, and that you respect what risk capital means to the country, and that you will protect risk capital. No uncertainty about when, how you'll take it out. Every year there's a discussion about Mauritius. Will the tax treaty stay, not stay? All this is unnecessary. Keep it very simple. So this is one specific thing that can really help in bringing more risk capital to our ecosystem.
So one kind of related point to this overall discussion is when you're looking for this alternative funding, right? So, and also to an extent encompasses your point that where you say the capital, it's a flow. You've got to look at the entire stream, right? So I was once involved with a fund that the government was planning to form, specifically for pharma and biotech. Okay, it didn't happen. But the problem there was they had asked for industry participation, which I thought was a good thing, because then you would get the industry's view. But where that participation stopped short was that the fund would determine what would get funded and pass it on to industry later. And that really was the problem, because the question was, if industry was involved with it from the outset, you would know what should get funded. Because I'll tell you what the example is, right? So let's say there's a product that to get into the market, that's an innovation stage, government lab stage or any lab stage, right? And to get it into the market is going to cost $40 million. Right? So if the government fund funds only up to 5 crores and beyond that you're on your own, the entrepreneurs on their own, we'll do the first 5 crores and then you go ahead and get capital from somewhere else. If the wrong projects were funded at that stage, they'll never go anywhere and the initial fund is actually gone to waste. So the involvement of, even at the identification level of those projects, should be both public and private. I think that's the kind of participation that you need from the government. Because if you can set that you should put your money to good use. So if you have this kind of involvement, then what happens? The right kind of projects get identified early. The fund gets its initial, the company gets its initial funding from the government. It gets to the some stage where maybe private equity investors, maybe industry experts are part of the board of that company, not as hands-on mentors, but at least they're watching the progress and guiding the company to say, okay, you are now ready for private equity funding, maybe I'll fund you. That is not happening here, which is the SBIR scheme in the US that happens. So that's one fundamental structure if we could bring in, that would be a very good thing. The second thing I would say is that if for any project that's coming out of Indian laboratories, right, the tech transfer needs to be done well. It's not being done very well right now. Because what's happening is that I believe that two things need to happen, which are very difficult. In fact, this is the talk I give almost every year in ASCII, right? So two things need to happen there. One, that the people who develop the technology need to be incentivized beyond the government funding. Right? Because somebody comes up with something really novel, half the time they will not leave that government lab to join the company that's set up. If that guy is the brainchild behind it, how can the company do without him? But I think the government has started thinking of ways, okay, you can go for a year or you can take a sabbatical, but that's not enough. The involvement, it's effectively that intellectual skin in the game, right? So the guy, you have invented the product, you need to be part of the game. So that's another area I think there's a change required, where inventors of technology need to be or innovators need to be part of the final company that's being funded. Okay? And especially if it's come from the government and it's a technology transfer from the government, from government laboratories. The second thing, so this is what we are asking from the government. What we are asking from the industry is, don't lowball the valuation at that stage. That's really wrong. So somebody picks up, and there are horror stories, right? I know from the pharma industry in this country where people have bought technology for 15 lakhs, 12 lakhs. If you look at the overall cost of the project, but with government funded, which is essentially taxpayers' money, right? It could be well in excess of 1 crore. But at that point in time, the technologies, the company that took the technology decided that the valuation would only be 15 lakhs for whatever reason, right? But that's actually not right, because the technology could have been worth much more, and it was structured as a one-time payment, so that the person, the government or that lab loses out on royalties and things like that. So some structuring and if public-private has to happen in this country, the two things need to happen. The funding everybody needs to be involved in what is funded at the outset, and there should be equitable. There should be an equitable thing for both parties.
In the last few years, we are seeing a whole lot of startups and startup competitions. Business plan competition, startups competition. You have the Startup First Dot and Power of Ideas, which Madam had mentioned, and all that. And they do give away a fairly large sum of money as that. Is that a good source of startup capital? And a follow-up question to that is that have any of you been part of the panel of judges in that, and what do you see when you award a particular idea?
I don't watch television. I'll let Aditya deal with this.
So again, I think we should look at this statistically, right? So what percent of business plans that have won that competition have become big companies today? I think that's really the question, as opposed to somebody who hasn't gone through any one of these, just gone straight to a VC, great background, come out of a big company like Amazon, raises a huge amount of money purely because of track record and without any competition. So I think you'll find that the latter has been far better funded, right? And I don't know if that's true about the US also. I mean, how many business do, for example, Stanford business plan competition guys end up getting more money?
I think this is just creating visibility.
I think you're right.
For an underlying phenomenon.
Yeah, I don't think it's a serious source of fund. It's not a strategy for an entrepreneur.
Part of the kind of funding they get is about 20 lakhs. For any
Right.
science, good
Right,
science
right,
project, you need at least 5 CR kind of funding to be able to say that yes, this is a good strategic marketing game.
Now, if we are going to move to an innovation-centered, product-centered business model, I mean, how can you miss out on marketing? And this is not marketing communications, it's strategic marketing. And your mention of strategic marketing triggered the thought. This is about market segmentation, it's about value propositions, it's about differentiation, it's about positioning, it's about targeting your market correctly, it's about extracting higher price points for the value you're creating, not constantly selling ourselves cheap as a commodity. So that whole aspect, and it's about packaging, it's about presentation. So that whole cycle of very sophisticated global strategic marketing practices is a key part of the mentoring that's going to be required when you're moving from a low-end, low-value, high-volume services economy, and you want to create something to complement that, which is a more high-value, product-centered, IP-centered economy.
Actually, I happen to be in the jury of some of these award ceremonies like India Innovation Initiative, I3 of CII, DST. Then there are other awards like DST Lockheed Martin Award, MSME Unido Award for clean technologies. One concerns me whenever I was there are certain people, they got the awards, 10 or 15 people or 5 people, they shortlist for getting awards, either 25 lakhs, 50 lakhs, 10 lakhs, 5 lakhs, whatever. So do we have any mechanism to follow up what happened next to them? Do you have any database? What about the last 5 years award they've got? How many of them actually become entrepreneurs? And what happened to the rest of the people?
You know what happens if they get funding from they run a one business plan? So eventually some other company will buy from different agencies, and after 2 years you will see their lab is full of awards, but actually they have no idea